Well, straight away, let's get cracking on the movers and shakers, the stocks that are buzzing in trade, which you need to have on your radar this noon. And it's all about Yes Bank. Since yesterday's late trade, the stock has rallied, close to about 15% in that period. Abhishek, what do brokerages say?
Well, the brokerages are saying that the CEO change is a big positive move for Yes Bank. However, they are cautious on other worries, which is that there is uncertainty on the divergence, which is the gross NPA as per RBI and gross NPA as per the bank. And that difference is called the divergence. So on FY18 numbers, that is still an overhang on the stock. Haircut on IL&FS is another overhang that brokerages are worried about. And they also await clarity on the new CEO strategy and the capital raising plan as to when and how Yes Bank will raise capital, because the CET1 ratio is right now at 9% and the bank is growing robustly at 40% plus kind of a loan growth. So we have CLSA who have increased the target price to 280 from 260. However, if you look at the other side, Nomura has actually cut down the target price to 245. Credit Suisse has cut down the estimates for Yes Bank over the next couple of years by 10 to 20%, and they have a target price of 205. Morgan Stanley has an underweight rating on the stock with a target price of 160. So mixed set of views coming in from brokerages, largely towards the negative side. Back to you.
Okay, all right. Thanks so much for that, Abhishek. Well, let's hop across to Mangalam. He's going to tell us about the new listing, Spencer Retail. Mangalam?
Well, Nigel, Spencer's Retail, which is the demerged retail entity of CESC, opened today at 224 rupees a piece, which implies a market cap of close to around 1,800 crores. But then the stock saw a sell-off, and at current market price trades at around 0.7 times FY20 sales. The analyst community expects the company to post FY20 revenue of around 2,500 crore rupees. So if you take a look at how the company is pitched against the peers right now, FY19, for instance, trades at around 0.9 times, which is the cheapest as against all the other companies. Why is that? Well, because there are a couple of reasons why the valuation multiple isn't higher or as high as the others get. One, because it is the smallest in terms of the retail size as well, close to around 1.2 million, which compares with nearly 20 million for Reliance Retail, almost 15 million for Future Retail. DMart itself has around 5 million square feet worth retail space. Not just the retail space, even if you take a look at the revenues, the company last year did revenues of close to around 2,100 odd crore rupees, which is among the lower end in the comparable peers. However, while the company is doing 2,100 crore rupees of revenue, the sales growth over the last few years has been pedestrian at around 8%, much lower than what the industry was growing at. And it was only last year that the company made an EBITDA profit of close to around 17 crores, and that too on a revenue of around 2,100 crores. So those are a few concerns that are weighing down the stock as we speak, which is why the multiples are lower than the others are trading at. And remember, this is a retail business. There are other players available. Spencer's is a new listing, so the street will await some improvement out there. The same store sales growth have been declining, have been a little volatile in the past as well. But let's hear out what the management had to say to us with regards to the future of this company.
About 13% of our total sales comes from private labels. That necessarily means higher margins. Thirdly, over the last couple of years, our apparel margins have grown by 6%, and that is a new focus area for enhancing the overall margin mix. General margins have grown by about 2%. So overall, there have been significant improvements in the operations. We've added 19 new stores this year, all of which are doing well.
Okay, the biggest loser on the Nifty today is Ultratech Cement. That's down 4.7%. Nigel, yesterday we were talking about the numbers. Today, brokerages have lowered their estimates on the stock?
Yeah, they have cut their EPS estimates to some extent. So yesterday when the numbers came out itself, we had told you that in fact in the top line it was a beat because volumes were better than anticipated. But the problem was in terms of margins, and factoring that in and factoring in the acquisitions, that's why brokerages, they have lowered their target price as well as they have cut their estimates. Starting off with CLSA, they have a sell rating on the stock. They're saying now there's going to be less predictability in terms of their earnings going ahead, because you'll have Century Textiles cement plant coming in there, and you'll have Binani Cement's plant as well coming in there. So, and they've also highlighted that the management remain more cautious in terms of pricing, which is a bit of a concern. Otherwise, they sounded quite optimistic. This time around, they were a tad bit cautious. Deutsche Bank, they retain a buy rating with a target price of 4,110 odd. They say that in fact, this Binani acquisition will drag the EPS. Whoever got it, whether it was Dalmia or Ultratech Cement, it would be a drag nonetheless. They are saying that it will dilute the EPS by nearly around 15% for the next year. You have Credit Suisse note as well. They have an underperformed rating. Target price around 3,300. They are, cut their EPS estimates by around 16 to around 4% for the next few years. Two factors out there. One is weak pricing. Second is this Binani acquisition. And finally, Citi has a view on it. They are continuing to value the stock at around 15 times EV upon EBITDA. They have tweaked their EBITDA estimates, though, because to factoring in the Binani acquisition, and that's what leads to a slight, tapering down in terms of the target price from around 4,700 to around 4,450 odd. Stock under pressure. The big problem, Dreamna, is pricing. Can we see a price hike going through, and can it sustain? Because in the last few months, every price increase has really been pulled back.
Okay, and those big acquisitions also not helping the balance sheet. But now it's time to go across to Sonal, who's going to fill us in on all the other stocks. Sonal?
Thanks a lot for that, Rima. And a lot of stocks are buzzing today because of the results that they reported post-markets yesterday, starting with Pfizer. Healthy numbers reported by the company this time around. The margins, they improved substantially by around 420 basis points. Even the profits, they came in higher to 132 crore rupees versus 87 crore rupees on a year-on-year basis. And these profits were also aided by higher other income. Remember, the company has sold 2 brands for around 30 crore rupees, and that is what aided their profits this time around. Zee Media also reported good set of numbers. Not only operationally did they do well, the revenues also came in higher by 22%. The net profit more than doubled to around 27 crore rupees. Jindal Saw also up and about in trade today because EBITDA margin improvement came in around 230 basis points at 11.4%. The net profit also came in higher by around 57%. Kokuyu Camlin, that stock is buzzing on the downside because the net profit declined by around 77% to 1 crore rupees. And lastly, Bharat Bijli, that stock is buzzing in trade because though the revenues, they were down around 1%, the net profit went up by 35% at 13 crore rupees, and that's why the stock is buzzing in trade today. Back to you.
Okay, all right, Sonal, thanks so much for giving us all those details. Well, here's a quick recap of all the stocks that we just covered. We have Yes Bank, Spencer Retail, Ultratech Cement, Pfizer, Zee Media, Jindal Saw, Kokuyu Camlin, and finally, Bharat Bijli.